Yeah, so firstly, welcome to all of you. Very, very excited about this discussion that lies ahead. For context, we almost have as many cameras in the room as we have people. And one of the main reasons for doing that is we will be putting this up on YouTube. It's specifically and across other platforms. It's a topic which is extremely relevant today. And we'll really be talking about collaborations between financial institutions, how the world is evolving and how we can make this into a more seamless, but at the same time, a more secure, just build a more secure infrastructure. So, but before that, as means of an introduction, my name is Anubhav. I'll be moderating this discussion with such an esteemed panel of guests. I'll start with Derek. Derek Ho is currently the SVP at Mastercard. A very, very strong experience within the privacy and technology space. A lot of experience also within the telco domain in particular. It's been there for over a decade and has a rich experience. So Derek, again, welcome. Jay Prakash is the founder and CEO of Silence Laboratories. The company has been making a lot of news, a lot of positive news in terms of its efforts in developing privacy-enhancing technology capabilities, both within the Web3 and now more recently in some of the mainstream sectors such as telcos, healthcare, and financial institutions. I'll move to Siddharth Shetty, also known as Sid. He's the CTO at DigiSahamati Group. And really, DigiSahamati is pretty much at the heart of all the recent development that has happened within India in terms of driving financial inclusion, multiple efforts, and sort of the brains behind this. So welcome, Sid. Sonja has a very, very rich experience. She's currently an advisor at BIS, Bank of International Settlements. She's also the deputy director at MAS, Monetary Authority of Singapore. Rich experience as an economist and driving digital transformation for a long time, but over 12 years at IMF. And welcome, Sonja. Super excited to have you too. So, look, I want to set some context, but and I'll start throwing over a few questions, and we'll keep this discussion very interactive. I have a few guiding points, but please feel free to step in. There is no necessary process in us going one by one. I'll set some context, and we can just run from there. But I think the reason why I do believe that this topic is so relevant is that as we are moving towards, I would actually say that we are pretty much now in a borderless economy. The world is sort of one place. There are some geographical borders, yes, but given all the development that has happened recently, cross-country, cross-domain collaboration, specifically within the financial sector, is becoming increasingly important. And while there is a lot of cross-border traffic that is happening, there are also plenty of vulnerabilities, plenty of challenges that are coming in from a technology standpoint, from a regulatory standpoint, and also from just specific use cases that are opening up. There are certain frameworks that are in place, but naturally this is still early days, I would say, in what would be potentially a much longer journey. So, just with that, maybe Sonja, I can start with you. Today, the BIS works pretty much at the heart of this, right? Because you are fostering international collaboration across different banks. I would love to get your perspective on, some of the challenges that you're facing, specifically when it comes to collaboration between nations. Every country has its own set of laws, has its own set of regulations. Just curious to know from a data perspective, specifically, what are some of the challenges that you're seeing when it comes to cross-border collaboration?
Thank you. Thank you very much for the invitation. It's great to be here, and I'm very pleased that we're discussing an important topic for us and more broadly for the international community as we're shaping cross-border payments. And I think you got it right. Like, as we're fostering cross-border payments and international collaboration, we're we are running into stumbling blocks, and one of them is differences or divergences in regulatory and legal frameworks that we have across different jurisdictions. Now, I don't think the end goal is to have them all harmonized so that they're all the same in all countries, because that would be a very difficult task, and I would dare say it's not a desirable outcome, because excuse me, every country has their regulatory intricacies that are based on that country's history, cultural background. So I don't think that we should attempt to harmonize all of the countries' regulation, and I think it would be an extremely difficult task. So what we're trying to do is to see how can we use technology to streamline some of these compliance processes that exist, and ensure that we have, to the extent possible, explored or exhausted all the avenues that technology offers us to be in compliance with jurisdiction-specific policies or regulations, but also at the same time automate, streamline, and at the same time preserve privacy, because that's one of the key issues that we have to deal with when we're thinking about, specifically about data-related regulatory measures. So when it comes to data specifically, we have different data privacy frameworks that exist across the different jurisdictions we're dealing with. So it makes it extremely hard to share information and data across borders. While we can do that within Singapore, and MAS has a great project called Cosmos, where the banks are encouraged to share data on their specific clients and on specific or potential fraudulent activities among each other. Extending that to the cross-border space would be very challenging, simply because what Singapore considers freely available information, for example, may not be the case in a different jurisdiction just across the border. Here, Malaysia might have a completely different view of what is considered private or sensitive information. So to the extent we can, in most of our projects, we're applying the most conservative approach, just so that there's no race to the bottom and we don't encourage regulatory arbitrage or introduce some friction that was not intended. So we're trying to say, okay, we will make sure that compliance is given for those with those measures that are part of like the Financial Action Task Force recommendations. One of them is recommendation 16, which is currently in the process of being revised, the so-called travel rule. I think that's the more popular name out there, but this we have to ensure that we're complying with. So we need to make information about the beneficiary, for example, the ultimate beneficiary, available across the payments chain, but at the same time, we also want to protect other data that banks, for example, consider proprietary or sensitive information. So we try to strike the right balance in complying with financial integrity measures such as the one set by FATF, but also protecting that information that is proprietary and sensitive to banks. And that is basically also its mini universe of regulations, because every bank has a different risk profile. So based on that risk profile, there will be marking data as sensitive or proprietary, and that will be different, again, depending on which jurisdiction you're based in, but also which risk profile the bank has. So it's quite a challenging environment to navigate, but I think that especially for one of our projects, Project Mandala, that we'll be talking about more today, we're trying to see how we can strike this balance so that we're ensuring this compliance with financial integrity measures, but also allowing the maximum privacy so that no sensitive information is exposed to third parties. Maybe I'll stop here and then we can continue later about Mandala and others.
Sure. No, I think that's a great framework for this discussion, because you're right. Like, collaboration is not just about across countries, but it's almost also every sector within each country also has a lot of collaboration. So when you're thinking about different banks, often while they do need to comply to a central framework, there are also specificities that will exist with each of them. So it's a fairly complex, I guess like a complex topic. And I guess when I think about complex topics, Sid, given all that has happened recently, and you've seen open banking and specifically in India to really evolve over a period of time. I'm curious to know like some of your key learnings and also perhaps surprises which came along the way when you talk about consented collaboration within India, in your experience, specifically maybe from an account aggregator framework perspective. Love to get your perspective in terms of what you've seen.
Thank you, Anubhav, and thanks again, Jay. And it's truly an honor to be here and participate in this panel along with Sonja and Derek. Before I dive into that question, maybe if I share for the audience here a bit of context on what we built in India that pertains to consented data sharing. So a few years back, we started to ask the question, especially as large parts of the economy digitized, and so people were generating a lot of transactional data. We asked the question saying, how do you give people and businesses control over their data such that they could use it for a range of purposes that are meaningful to them, whether that's sharing it to get access to better financial services, sharing that data to get access to better healthcare, educational opportunities, skilling, and so on. And so that required us to think about, both at a legislative level, but also at a technology level, how do you give people control? Merely laying out a policy framework is not sufficient and will not translate in the digital world that we're in into actual control for people. And so that's really how the journey started. And then the first sector this idea got applied in was within the financial world, where the central bank, along with the capital markets regulator, insurance regulator, pension funds regulator, and then the finance ministry collectively came together to say, okay, in the financial world where there are a lot of information asymmetries, can we give people control? And so they, in 2016, put together a policy framework and created a new class of institutions called account aggregators to do that. And these institutions are nothing but managers of your consent. So they can't store your data. Think of them as just a courier service or a postal service. They just facilitate the flow with your permission, with your consent. And over the last few years, that framework now covers over 2 billion financial accounts, and over almost, I think, 100 million people have used that system so far. So it's still early days, but through that journey, we started to realize the power of actually empowering every individual and business with access over their data. And what we realized is they started to, unlock a whole range of use cases. Lending on the back of digital capital rather than physical collateral, getting access to capital markets because they were now able to get newer forms of investment advice and navigate that ecosystem. And so we really saw how data from traditionally just being used for advertisement purposes in the general context in the internet economy now start to get applied in a way that allowed people to meaningfully improve their own lives. And so the account aggregator system has really evolved over the last few years. And at this point in time, very recently, India also passed its data protection bill, which is now an act. And a key part of that is, one, it of course strengthens accountability every time data is shared, but it also introduces the notion of consent managers at the level of the act. And that means this will now apply to many other sectors, regulated or not, going forward. And so it really extends this idea of how do you take a techno-legal approach towards solving these problems, because at scale it's very difficult to otherwise translate legal principles on the ground. So that's really been the history with account aggregator, and that showed us the power of creating, how do you deal with, as you said, and even Sonja outlined, you have different institutions, in this case, different sectors. How do you unify? How do you create interoperability? Because at the end of the day, it's the user's data. we have created different silos to make governance easier, but the user's life cuts across all those sectors or all those countries and so on as the interactions are. And so how do you allow for a unified approach? How do you allow for each sector and each sectoral regulator to preserve their own autonomy, layer their own rules and limits, but at the same time ensure it's interoperable for the end user? And so that's really been the history and a large part that shaped the open banking rollout in India.
That's very interesting, and I'll actually come back to you, Sid, but I want to first get Derek's perspective. I like the word techno-legal, and I think that's a great segue to get you in, Derek. Just from, specifically given your background and your strong understanding even in terms of different legal frameworks, kind of throwing it out from a slightly different perspective. When you're talking about, open banking frameworks, when you're talking about collaboration across banks, even if it's just within, say, Singapore, or I add another layer of looking at collaborations between banks across different countries, as Sonja mentioned, what are some of the challenges that you're seeing today? And I'm also curious to get your perspective on how this has been evolving over the past 4 to 5 years. I feel that's also a big time frame. Maybe I should say 2 to 3 years, but love to hear your perspective on that.
Yeah, thanks, and thanks, Jay, for the invitation. I want to just pick up on what Sonja mentioned about the differing regulations and the challenges which have really posed lots of organizations. When I started in this area, maybe like over a decade ago, the number of privacy laws were, you could count them in the region in probably just one hand. Now we have almost every country in the region having a privacy law. And it's not just a new privacy law, but they're just adding on. You think about data sharing, AI, cybersecurity. It's just layer upon layer of that. And the laws keep on changing. So a lot of them are also upgrading their laws, from to follow the GDPR and just keep up to date. And with that, you have the obvious differences. And to Sonja's point, we won't get to harmonization, and it's unrealistic to do that. But the differences do make a difference. And I just call out maybe just 3 differences, which I see posing challenges, not insurmountable, but just something which you have to be aware of when you deal within the region and these different frameworks. And the first thing is that every use of data needs to have a legal basis. The legal basis basically means you are permitted to use it because you have obtained either consent, or you are relying on the performance of a contract, or you have a legitimate interest to use the data. Unfortunately, these different laws don't have the same slate of legal basis. Some are more consent-driven, some don't have legitimate interests, and some then also have a different set of exceptions. The challenge then is that you go to that lowest common denominator in a way, right, which is usually consent. And consent is great for certain use cases. For example, open banking, right, or just-in-time notifications where you want the data and you have those pop-ups and then you give that consent. In a medical context, it's really common to have informed consent for that. And it works brilliantly for those sort of situations. But it doesn't really work that well in certain other situations. For example, like fraud prevention, information security. Doesn't really work that well that way because you don't want to go ask a criminal for their consent, right? You don't want to ask a debt collector for their consent to use their data, because if you were going to do that, you're basically giving them a veto right? Or the ability to stymie your investigation or your analysis into whatever crime or whatever activity which they're trying to hide. So consent, not always great. That's why you have other legal bases like legitimate interests. But again, not exactly common in, across all the countries. Yeah? And then you have different interpretations of de-identification and anonymization when we get to pets. Obviously not one and the same, but you think about synthetic data and differential privacy. Some jurisdictions, some countries take a more theoretical approach to anonymization. So the mere theoretical possibility that you could re-identify the data makes it so much harder for you to take technical steps to de-identify it, because then you have to do way more to reach that legal standard. And again, because it's all different, some take a more pragmatic, reasonableness approach. Some take a very theoretical approach. So where do you land, especially when you want a cross-border collaboration, which is what we're talking about. You just can't look within your country. You have to look at where the other country is. So you have those differing standards. And then finally, you have the cross-border data restrictions. Whether these are regulators asking for approvals or some reviews or assessments before you send data across. That's one. Two, or you have just strict data localization requirements which prevent the data from going across borders. All those create a reticence effect. If you have a regulator saying you need to get my approval every time you want to send data across borders, most organizations say it's too hard, too difficult, I won't do it, therefore I'm just going to look within my borders. And that has different consequences which we can go into.
Sure. I mean, I think clearly a few themes which come out, and we will talk a lot about consent in a bit. I'll still come back to Sid and then maybe Sonja to get your perspective on, if you were to highlight the key challenges that exist, specifically when we're talking about cross-collaboration. It could be across geographies, or it could also be across different sectors. What comes to your mind? Just top 3 challenges.
Yeah, I think, essentially when we're thinking about cross-sectoral, cross-country collaboration, all it comes down to is you have these 2 ecosystems that have different jurisdictional rules, different boundaries, and how do you facilitate a flow, whether that's a flow of data, flow of money, flow of securities, and other types of financial assets and so on across these diverse jurisdictional areas. And as a mental model, 2 ways I like to think of it is, one, a large part of the regulations, especially for a lot of assets and a lot of data, are very supportive of the individual driving that action. So moment you have 2 systems, like 2 countries having to talk to each other on sharing data, that means 2 governments sitting across this table, it becomes extremely difficult. Or if 2 banks have to sit across this table and collaborate. I mean, collaboration in general is extremely difficult as a human behavior. Versus if the institution is able to give data back to the individual, and then the individual decides to share it. Let's say I decide to share, it's quite unlikely a hospital in India would be able to share my data with a hospital in the US for a second opinion. But the hospital in India can give that data back to me, and now they can give it in verifiable formats. And I could give that data to a hospital in the US and anywhere else in the world, and both can comply with their respective local regulations. So I think one mental model is how do you really move, and I think a lot of the recent cryptographic developments allow you to move these assets and data back to the individual and still have verifiability in all of those key trust characteristics. And then I think the second part is, yes, some data the individual may not want to share. For example, the previous liabilities that I've taken. And generally, societies have evolved a way of thinking about those types of data for fraud purposes or your previous borrowings and so on and so forth. And there, how do you allow for data to remain where it should be within those institutions, but actual compute can move so that at the end of the day, business workflows can run. And so that's really how I like to think about it. On one end, let the individual drive as much of the action, because that's much easier than anyone having to collaborate. And two, where collaboration becomes really critical for certain types of data and use cases, can we look at technologies that allow us to, allow data to remain there. You're not in any which way then hitting up against different regulatory boundaries, and then you have to try to harmonize or any of that, but really shift those business workflows and interactions to those local data environments.
Yeah, maybe just to say that I wholeheartedly agree with Sid here, because for these disparate measures as they exist in the cross-border payments context, we thought that of a solution that is decentralized to the extent possible, where we leave it in the instances for Project Mandala, we leave it with the financial institutions to run their own checks, to host that, to host the MPC, in our case is a multi-party computation solution, within their environment. And if there is a need for a shared collaboration or shared calculations, we enable that through this shared computation space that is provided through the MPC. And that works really well because of the disparate nature of the regulations and policies that exist. No other solution can, in my mind, allow for the scalability and also robustness of a solution, because the moment you place an intermediary between the two, you're forcing the participant to expose themselves, their data, their environments, and everything else to yet another party in the payment chain. And our goal was to try to reduce the number of intermediaries in the payments chain rather than add yet another body in between the two banks. Because as two banks engage in a payment, for example, there's truly no need for them, not even for the messaging layer. They don't really need anything in between them. Like, that's why a core feature of Project Mandala is the peer-to-peer messaging solution that we're also developing, because we just believe that to facilitate that collaboration to the greatest, to enhance it to the extent possible, we wanted to also give them the ability to communicate peer-to-peer in a disintermediated fashion without the need to have a centralized body in between them. But your question was around the challenges, which, I don't even know where to begin. There are just so many. We actually spent a great deal of time talking to financial institutions within the 4 jurisdictions that are part of Project Mandala: Singapore, Malaysia, Korea, and Australia. And the key issue is, for example, which I wasn't aware that when I first started the project, sometimes banks don't even know what are the pertinent regulations that apply for the payment they want to send. So the lack of transparency about which policies and regulatory measures apply is just unbelievable. Large banks have their offices within major jurisdictions, but not every bank will have the luxury of having an office or a representative within that country. So they need to know what are the actual rules that I need to be in compliance with, so that I can make sure that I have straight through processing, that this payment goes through without any frictions or hiccups. The number 2 question is that it's a zero trust environment. So if I, as a financial institution, as the originating bank, I complete my sanction screening, for example, the beneficiary bank will most likely run those same checks again, because they don't rely on the checks that the originating bank has completed. Which, when you think about it, they're probably checking against the same list. It doesn't make a sense at all. But that is what currently that is the status quo. And to change that, we have to we have to build trust that whatever solution we come up with is actually one that the banks can rely on. And this is why it's critical to have the public sector, the regulators, and the country supervisors be part of the project, because if they have use for whatever the solution is that we're building, then most likely the banks can rest assured that it's a viable instrument they can rely on. So that's the number 2 challenge, duplicate checks. The number 3 problem that we see is that the sheer number, and I think you called out a few approvals and consents that are needed, right? So right now it's a very manual process. You go in and then you request from the central bank or country's regulators an approval for the transaction you want to send, and then they respond, and then like later when you, for example, in a case of a loan, when you want to repay, you have to reattach that approval. So it's a very manual and extremely cumbersome process. So we try to see like to what extent within Project Mandala, how can we automate some of these so that you don't need to resend information. You have a unique identifier that is linked to any kind of approvals or any kind of checks that are being done. And we pass that on as a so-called verifiable compliance proof that is cryptographically protected, so there's no tampering with it. So I mean, it's not obviously like not a silver bullet, but we do believe that it will help with remit some of that information that is needed to conduct a payment in case of approvals or any kind of checks that are required. And third, I want to say there's a large issue, and that on itself is like a topic for another panel, is the data formats, like formats in which data is sent and transferred. There is, of course, an attempt right now to standardize how that's happening through ISO 20022. The ISO standard that SWIFT has been working on actively, and many financial institutions are deploying. But there's still a even within ISO 20022, there's many fields that are just like the Wild West. There's no rule as to what can be included with that field, what information should go in there, and what is the length of the field, and so on. So lots of issues around the standardization, how the data formats, how data and what shape or form data is transferred across borders. So there's a whole working group or working area that's looking just at the data formats. We, as part of Project Mandala, are not looking at that specifically, but we are looking at the first two, where we try to streamline, automate, but also make the streamline the compliance processes, but also ensure that there's payment transparency for the financial institution, so that before they even send the payment, they know exactly what they need to be in compliance with, because that is, to me, I think the starting point for any kind of solution, as obviously the more information you have up front, the less frictions you'll encounter along the payments chain later down the line.
That makes sense. So I think that's, there are a lot of interesting themes that came out. I was trying to synthesize them into very, very broadly 3 areas. I think one is clearly there are lots of open concerns around data flows and data movements, right? So is there a world where financial institutions and so many other sectors, but let's talk about financial institutions, don't actually have to move data? Because I think there are a lot of concerns around that. The second thing, we're clearly coming from what Sonja mentioned, is just efficiencies and transparency. There are different financial institutions that are potentially computing the same set of, same measures at their end and then at the other end, which is also a lot of, there's just like a lot of inefficiency on top of the trust. And I think there is something which was also touched upon, which is trusting a third-party source and potentially opening yourself up to another source of failure or another single point of failure. A lot of interesting themes over there. And Jay, I guess, want to get you in over here and understand from you. You've, at Silence Laboratories, have been working specifically within this space in terms of building PET, privacy-enhancing technologies that can help address some of these challenges. So I guess the question from my side would be, is it actually possible to drive computation without data moving, right, given the sensitivities that people have? Secondly, how do you actually address this fundamental issue of, a single point of failure? And I guess the third theme also coming through is that if there are businesses driving, or other banks in this case, driving computation or driving analysis at their end, and the same analysis then gets repeated on the recipient's end, how are you looking at building technology services that can address some of this?
Right. Yeah, we are lucky to be in a very interesting spot. We get to hear from technical people from policy and from architects, all the constraints. And that constraints drives the innovation which we do from cryptographic perspective. So we see this whole constraint domain from two lenses. One is data ownership, and one is trust assumptions. And consent management, who owns data, how it can be moved, can all come under ownership. And then which party computes, how data flows can come under trust assumptions. So, I kind of agree with the both mental model, which Sid told and which Sonja told. It depends on the use cases. But fundamentally, to answer your question, yes, there are ways to compute without actually moving data between two or multiple parties. And that's something which we have been doing as a company at Silence, using the tech which you named called multi-party computation, which fundamentally allows you to compute any arbitrary function, theoretically, at least, between two or more parties without actually moving raw data between them. And that's the guarantee which you can provide information theoretically and cryptographically, which we have been pushing a lot lately. One interesting thing which comes to mind is we should somehow bind the user intent and consent, if the data is owned by the user, with what computation we are going to do. And that's very important. Then only we can provide a full audit trail for the enterprises for banking innovations to happen between international borders. And probably that's where the sets design, which Sid was saying about the mental model, can come into picture. Not allowing the third party as a compute node, but more as a relay, just for triggering what actions to be taken as a consent manager. That is something which quite innovative, which we can bring to the table. And then certainly you have two or more banks across the world doing any arbitrary computation for risk analysis, for collaboration, for financial transactions. And coming to your next question, efficiency is very important. And if the computations are redundant, the collaboration certainly will help to narrow it down to a great margin, wherein pets like MPC is quite important.
Can you still, just for everyone's benefit, clearly explain what is MPC?
Right. Just for at a very abstract level, MPC is a cryptographic primitive which allows you to compute a function f on distributed data sets. Let's say on this table we have D1, D2, D3, and D4. Can we compute any function on these distributed sets without exposing data to each other? That's a very abstract level how MPC works. It's an interactive chatty protocol. And this function can be anything. It's like you're designing a new complete end-to-end operating system, which can be done using such tools.
Maybe just to add to that, it's always easier to understand what this technology is about when you have a use case. So for us, for example, in the case of private sanctions lists, so every bank has their own proprietary sanctions lists that they also check against, in addition to the ones that are publicly available. So for us, that was a great use case for multi-party computation because those lists never have to leave the bank environment. They reside within their environment, and yet we allow the beneficiary bank to check and make sure that the ultimate beneficiary is not included in one of those lists without ever seeing the data. So right now, the way sanction screening services work is that there is a third party, and then you send all your data to that third party, and they check for you and give you the results. But we just didn't think that that's privacy preserving enough, because you don't want to be in a situation where you as a bank have sent these lists, sent your raw data to an external party, and then there's a breach or whatever, some data leak that exposes all of this information to the outside world. So in this instance, MPC, multi-party computation, works great because you are, and this goes back to Sid's point, you are always in control or in ownership of your data, and you're just allowing this data to be checked without ever exposing it, but still verifying to whoever is in your payments chain that you have, that the checks have been performed against those private lists. So when you have private information you want to protect and you don't want them to leave your environment, like private sanctions lists or other private data, MPC is a very viable solution.
That's a real evolution purely because I think clearly the challenge of not allowing data to move, or rather just providing a solution where there is no movement, it's just the computation which is happening sounds something definitely for the future. So I guess getting you into this, you talked about, or rather just love to get purely from this, your experience, because you've helped design a digital public infrastructure. You do understand purely from a framework perspective how this can be executed. So how do you see pets or these types of technologies actually coming into reality on a more mainstream basis? So obviously we started now seeing a few use cases. We just spoke about one. But how do you actually see this going mainstream?
Yeah, I think if we sort of look at the conversations we've had so far, what comes up is a lot of these either extensive bilaterals as a way to secure some form of trust between parties when they collaborate, which are very legal intensive, they become very expensive. Or earlier mental models where the risks of high value transactions are different. If I'm sending $1 million, the risks are very different than if I'm sending $1. And especially when we think about it from an inclusion context, a large part of the world is really transacting in much lower value, but at much higher volume, where efficiency becomes extremely key. If the underlying transaction costs are high to process any transaction, it's not profitable for businesses to serve those markets and customers, right? And so when you think about inclusion at scale, you're really asking the question, how do you lower transaction cost such that new financial products can be created? And so I think in that context, I mean, even if we go back and you think about encryption, what's fascinating is it's like a similar class of problem. If you didn't have, thanks to the developments of the cryptographic community, if you didn't have encryption, how would people trust each other? You would form very closed loop chains. Because you'll say, I can only trust you, that party can only trust the next party, and everyone would only form these highly closed loop chains, tightly permissioned chains. And that's very expensive. You can't contract with the broader world. And along comes encryption, and now I have a mechanism with which I could contract with the broader world via multiple intermediaries while still having pretty much the same guarantees at much lower transaction cost. Because now anyone can encrypt with a cryptographic library vis-a-vis only few parties that could build those highly permissioned, trustworthy chains to carry information through, right? And I think the recent developments, whether it's on verifiable credentials, whether it's some of the work that's happening to build out more secure forms of data sharing on the zero knowledge side, multi-party computation. I think a lot of that is moving us into a world where without those technologies, we can't do low value, very small ticket size transactions, payments, investments, transfers of different types at scale, at high volume. But if you can start to deploy these technologies, you can in fact strengthen guarantees, improve, overall financial stability, improve trust. So you're not lowering those barriers. You're not saying, let us reduce the risks to bring more people into the system. We're actually strengthening the system overall, while at the same time making it much more efficient for different participants to come together and do more transaction at a cheaper cost than was possible before. So I think really privacy enhancing technologies have the ability to tip that balance towards supporting that whole new set of transactions. Because otherwise, if you're doing a high value transaction, the current system works extremely well. If you're transferring $1 million, it's already solved for. But when we want to scale it out, that's when it becomes an issue.
That's certainly interesting. Derek, love to get your perspective on, there's obviously PEG technologies are, gaining significant traction. I think they're still short of being mainstream, but they're definitely gaining traction. Just curious to know purely from a regulatory perspective, where are we at on that curve, right? Are these technologies still considered to be novel ways, but is the general perception like, we'll see how it goes, we'll see a few use cases, we'll potentially see a few things breaking, and then build regulations basis that. How are you seeing this evolving?
Yeah. Very early days, in terms of pets adoption. We definitely see and hear noises and signals to say that the regulators are looking at this with keen interest as a way to facilitate, data sharing, data analytics, and also as an enabler for AI. So we have heard, right, G7 digital ministers in 2022 released a communique which said that, there should be further discussion and collaboration around pets. That was followed by the G7 data protection authorities, who also issued a communique saying that, they should look into use cases, and then an actual use case around the use of synthetic data in the healthcare context was produced. So definitely a lot of regulatory exploration in Singapore as well. You have the Pets Regulatory Sandbox. The ICO in the UK also produced a set of guidelines on pets. But the one thing which, and I think someone mentioned it earlier on, it's not a silver bullet, and the regulators consistently say this. It is not a silver bullet. And going back to the point about use cases, I think we should, I would caution against a purely techno solution to it, for the simple reason that you can apply, MPC, homomorphic encryption, federated learning to certain use cases, whether this is, sanction screening, AML, or fraud prevention, or just general data analytics, right? Data sharing fraud analytics. But for certain other use cases, you still need the data. And we have to remember that a lot of privacy laws say that a transfer of data includes remote access. You don't actually have to have the data leave your environment for that to be a transfer. Yeah? So in those situations where you run up against the regulatory framework and say, well, a remote access is a cross-border data transfer, then what does that mean for your customer support, which provides a 24/7, 365, follow-the-sun approach, right, where you have multiple call center agents across the world, right, just because you have to have it, just because you need different language support, right, for your global customer base. How do you give them access to the data? Because you need to respond, hi, Sonja, yes, you did this transaction. Let me do your ID and V to make sure that I can access your account and service you. How do you do that? Even with pets, it's pretty tricky, right, to do that. So I think I would caution against just focusing on that technology as a solution. I think it's a toolbox, definitely one of the tools, right, but not a silver bullet.
Certainly interesting, and I think we will come back to this. I just want to kind of shift gears over here and talk about some use cases. We've touched upon a few. Got some stats in front of me. So 2021 McKinsey report suggested that the impact of open data ecosystems for finance of the economy could range from 1 to 1.5% of the GDP in EU, UK, and US, and in some countries in Asia as high as 4 to 5%. Clearly, so no one disputes the fact that there is clear benefits when it comes to open data ecosystems. But with that, obviously, there are certain challenges also that come through. And today, the stat that I have is that money laundering alone accounts for 2 to 5% of the global GDP. And less than 1% of that is ever seized. So that's a great way for you, Sonja. In what way do you think can borderless data collaboration actually happen, keeping in mind that money laundering is a real thing? It is the elephant on the table. How can this collaboration actually happen in an environment where this is still a big, big challenge?
I think for the BIS Innovation Hub, it's fair to say that we're looking at two approaches. One is this ex-ante and ex-post approach to tackling compliance. So I mentioned Project Mandala because it's trying to build compliance into the design of the solution so that we don't have to worry about compliance outcomes after post-settlement, but rather it's built into the core structure of the solution that we're building. To the extent possible, of course, we can't just take a whole regulatory framework and place it into or dump it into whatever solution we're building, but we have to be selective because regulation is such that you need to look at what is the purpose of transfer, what is the amount. Obviously, the risk is going to be higher, the higher the amount, and then what is the purpose of your investment. So all these things matter to say what you need to be in compliance with. So we try to do exactly that for specific payment corridors, for specific use cases. The other approach we're also using is the ex-post analytics. There's two projects in particular I'd like to call out, Aurora and Hertha, that are using machine learning techniques to sift through large data sets and see what are the potential violations of AML and CFT regulations. And so far, I think for Aurora, it's fair to say that it's been quite successful in like at least weeding out the false positives, because that is another big headache that is currently cross-border payments are marred with, that you have, as you're running through your sanction screening, for example, there's a lot of entities or people that shouldn't even be called out that are so-called false positives, right? So that is a big problem because banks spend a lot of time and a lot of resources investigating these false positives. So at least these projects can help weed out the false positives and help the banks or help the financial institutions that are involved in the payment chain focus on really those cases that are actual money laundering. But I have to say that I'm a big proponent of private and public sector collaboration, because the difficulties we're just describing here are touching the surface of the number of problems and the depth of the problem this boils down to. You're mentioning the amount of and the volume of fraud, but we should also mention the compliance costs that banks are faced with. Those have been just going on an upward trend for years now. So, and we see an increase in regulation to counter exactly that. So as opposed to finding solutions, we're just adding more regulation, which then again causes even more compliance issues. So what I'm trying to say is that whatever we're trying to build with the BS Innovation Hub, it is fundamental that we have the collaboration of the private and the public sector, because no solution can be viable if the regulators are not part of it. Same goes for financial institutions. The compliance proof we're building as part of Mandala is never going to succeed unless the supervisors actually accept that as a legitimate proof that you have completed all the necessary checks for your cross-border payment.
Yeah, so, and I think just from there, maybe Sid first you, and then Derek you. I would, from Sid, love to understand a bit more about, we were talking about this earlier, Finternet. Tell us a bit more about Finternet and everything that's going around over there. And I think maybe Derek, as a follow-up after that, there's a lot that's happening within the payment space, and I think it'll be great to get your perspective that when you're thinking about collaboration across businesses or across geographies for that matter, are there new revenue sources? Are there potentially new business models that you're looking at? But let's start with the Finternet.
Yeah, in fact, before I dive into the Finternet, I just wanted to build on what Sonja outlined. I think, especially as we think about the adoption of different technologies or privacy-enhancing technologies to be specific, a large part of it will also be driven by the public authorities' acceptance of those. And so, for example, you may have a digitally signed audit trail, which we all believe as technologists is verifiable and has all those characteristics, but it may not be even admissible as a form of evidence in a court, right? And so we run up into these types of challenges. And so it's important that we do carry not just the financial regulators and supervisory authorities along, but also the courts and many other broader set of public authorities that play a role in these regulated sectors and make them comfortable early on with this technology. Otherwise, they'll say, come back to me with a physical piece of paper, and you'll be like, it's a fully cryptographic system, but they're like, no, a piece of paper is what's admissible. And we've seen this on the ground. And so looking at these challenges, really, to your point on what the FinTernet is about a year and a half back, we started to then have a set of conversations with Augustin Carstens at the BIS. And he had also made a similar visionary speech on this idea of unified ledgers. But broadly, the idea was, how do you create a low-value, high-volume innovation transaction playground across different types of assets? And clearly some of the technologies, but also the regulations. If you see much of the regulatory intent, the political intent in many economies is moving in the direction of unlocking much more innovation, much more value, although sometimes those regulations don't flow back onto the ground. And so if you looked at both of those trends, we started work on saying, one, if we had to make, because we saw the power. In India, we saw if you give people their identity, and we basically over 1.4 billion people now have a digitally authenticatable ID, and they choose their attributes. At the end of the day, the concept was, you are your identity, we're just giving you an attestation so that you can participate in the digital economy. That allowed for the opening of 500 million accounts. We saw the same in payments, where if you gave people control over their flow of money, but also allowed for innovators to come in, innovate on the front-end experiences. Money could flow within regulated systems so that you basically unbundled that architecture well. Today, that system does 500 million transactions a day. But again, very high volume, very low value. UPI last year did $2 trillion. SWIFT does $4 trillion a day, right? But 40 million transactions. And similarly on account aggregator. So as we were reflecting on, some of this purpose-specific infrastructure that was built in India, in Thailand, you've seen a lot of success in Brazil with PIX, many jurisdictions across the world, very specific attempts that have gone on to succeed. We said, what would be a more general innovation playground that allows, one, users to be made in control of all their financial assets, two, how do we unify across regulated assets, whether that's money, publicly listed securities, registered assets like land or vehicles, different types of property, or even user-controlled assets. I may create a piece of digital content or art that's not regulated or registered with any public registrar, but how do I now transact? How do I transfer? How do I pledge? What if I want to take that piece of property and get it financed? Today, lenders will say, please bring me that property and those physical documents, and I'll put it into a locker. So how do you think about composability? How do you think about interoperability? What we realized is it's also important to separate form from function. So as we now start to create electronic representations of these assets, the function they serve will drive the rules they inherit. So if they serve the function of money, then the corresponding rules on who are the issuers, what are the counterparty rules, what are the limits, and so on would apply. If it's publicly listed securities, you'll have similar transfer rules and so on. So the second idea behind the FinTernet was, how do we unify? And the third idea was really, how do we do that on the back of universal infrastructure? Because what we realized is, it's also going to be very hard for everyone to recreate infrastructure from scratch. But if you could allow for the infra to be completely open, completely universal, that's the only way we can scale this to 8 billion people, 300 million businesses, but allow for the flows to be regulated on top of it. If money is flowing, you regulate that based on your jurisdictional norms, securities, so on and so forth. And so that's really the idea behind the FinTernet. It's about how do you take a user-centric, unified, and universal approach and create this innovation playground and bring that to life.
Understood. we have another 5 minutes maybe. Derek, love to get a quick perspective. I do have one pertinent question left, but I'll let you go first.
Yeah, no, I want to pick up on what Sonja mentioned. I totally agree with her in terms of the need for that public-private collaboration. We only can see as far as our noses, right? So it's really important for us to be able to work together with each other because we're coming from different perspectives and bring different experiences to the table. And that point about financial crime is just a perfect example of why we need collaboration. We know that the criminals are collaborating, right? They are sharing information, they're sharing tools on the dark web. At the same time, financial institutions, the whole ecosystem needs to share information. The challenge, of course, is that the different disparate laws, going back to where we started from in the top of our conversation, kind of creates that friction. So definitely the technology can help. I think regulation also needs to move with the times, and that can only happen with the collaboration. Again, that discussion and the comfort levels which the regulators need to have, Sid, to your point, we need to bring them along so that they become comfortable with the new technology, with the use cases to know that, well, we're all on the same side, to be honest. The criminals are on the other side. So let's not engage in friendly fire. Yeah, that's one. I think different enabling services like PETs or tokenization, which definitely is a reflection of data minimization, right? You're trying to reduce the amount of sensitive personal information which is floating around the ecosystem. So you tokenize and create, you change your bank account number to a token, and that helps as well. These enabling services, help the underlying business models, right? Because ultimately the transaction is the end of a commercial transaction, wherever that commercial transaction is, whether it's a B2B or B2C transaction. These enabling services help. And then obviously, you talked about new business models, and I think open banking is one of those things which will continue to gain attraction because there's that demand from consumers, right, to control their data and to also get access to innovative financial services, which is really something which open banking and the underlying consent methodology will help.
So let me round this discussion up with reality, right? So Jay, let me ask you this. Clearly there is a need for a technology solution. There's some great work that you're doing around that. Do you face resistance from financial institutions to help or to potentially implement this? And what are those, or is it smooth sailing?
That's a very interesting question. Before answering that, all the cases which we have talked, AML and FinInternet and others, these all have an interesting set of problem which is based on network effect. If the network spans and PET can match that scale, it's a very beautiful solution which we can enable, which we are waiting for, and that needs huge optimization in research and product and good engineering effort because you have huge amount of data. In a bilateral collaboration, it's quite easy, but in a multilateral, in a complex network, it will be quite interesting problem to solve. So that's where innovation is required. But to answer your question.
But before that, Jay, so if you would elaborate a bit more, where do you think we're on that journey? I mean, how far away are we from taking it at scale? How far are we on the research aspect? I know, with your own background, you do have a strong understanding of where we are. So how far along are we on that journey?
Right, so it's all a function of numbers of nodes participating. So we do have seen cases where tens and hundreds of nodes and you can compute. But if you want to expand beyond that, we need to do some research in that direction.
I think people always like to ask that question, when are we going to adopt something at scale? And I always have to chuckle because technology is actually not the issue. It's more about what Derek mentioned earlier. How do we ensure that we're complying with data laws that are prevailing in the jurisdictions where want to implement this solution in, right? So those are the how do we determine legal liability? If something goes wrong, like who does the buck stop with? Is it, in a disintermediated solution, you need to be very specific about here is where your responsibility begins and ends. And it's more about those challenges we need to solve for first before we can talk about adoption at scale. Technology can handle it. I think that for Project Mandala, we're just illustrating the art of the possible based on two stakeholders, and it's very easy to do that, very easy to illustrate it. But where the more fundamental and difficult questions come in are the ones where people ask like, oh, but what about legal liability? And we cannot answer that question yet until we actually simulate that in an environment. And hopefully there will be, and it seems like there is enough interest from the commercial banks at the moment, also from the regulators and the supervisors, to try the solution we built for Mandala, to try it out and see how it works. Because only if we actually simulate it in a contained environment, controlled environment, can we get answers to the questions that need answering, such as like legal liability. How do you ensure you're compliant with national data laws? To what extent can the supervisor use these tools and like support any kind of revisions to legislations that are needed? But this all takes time. Regulation is a sort of lag factor, so we just have to be patient and create these controlled environments so that supervisors and regulators alike are comfortable with what they're seeing, and also for financial institutions that they gain enough trust in the solution that some of these inefficiencies and redundancies are removed in the process. So it will take a few more years, I would say, of experiments within these controlled environments so that we can get enough data, we get enough information to make revisions to policies and regulations as pertaining to the data that is being shared, or the proofs. In the case of Mandala, it's the actual proofs that are shared across institutions.
Just 100% on that one. It's almost like a chicken and egg situation, and we always have to remember these things cost money, right? You're talking about just not the licenses to do that, just the infrastructure, and then the people, because most of the talent you have currently in your organizations typically are not exposed to the cutting edge technology which Jay is working on. So it's a lot of cost involved. In order to do that, the point about reducing false positives is great, right? But what's driving revenue? It's a compliance cost and a compliance risk which you're trying to achieve, and efficiency is there. But when you talk to your CFO, it's really about, especially in these uncertain times, it's profitability which they're looking at. So how do you have that conversation about what's the use case which pets or whatever other technology, to be honest, it can be anything, right? Whether it's a server or moving to the cloud, how much is that going to bring the company? And
so would it be high on the priority list?
So that's how, again, you have to see what the priorities of the organization is, and also tell the story. Why is this important? How is it going to unlock certain opportunities for you, right? If not today, in a few months' time, or a year's time.
I think we need to get the numbers, because a lot of times you will ask, like, what does it take to commercialize this? And then we have to come with some overview of, like, how much is it going to cost? Like, what are the potential savings for you? And this is the number one question we need to answer as we're taking this project like Mandala further and within the controlled environment. But ultimately, given that the cost of compliance is only on the uptick, I always say whatever we build here and however much it costs, it's going to be a fraction of the cost that you're encountering when it comes to the compliance costs that banks are faced with nowadays, given that more and more regulations are being added, more countries are sanctioned or entities. So, but yes, ultimately, to convince somebody to commercialize this, we have to get the numbers. Otherwise, we risk talking about something conceptually without being able to prove commercial viability in the real world.
Fair enough. I think we are on time, so I'll let Jay, you go first, and then we'll end with you, Sid, very quickly. So we hear, from the perspective of institutions. Love to start with you, Jay. What is your perspective? While you're fully aware of this, what are some of the challenges that you're facing working or discussing with institutions? Where do you feel that there can be, is there a room for more flexibility, or is there a room for a more realistic implementation, keeping in mind all the challenges that do exist that have been mentioned? What are some of the challenges that you're seeing? And then, Sid, one quick last comment from you. We'll round this up.
Yeah. So, to answer the question which we did not touch, the challenge which we face is how do we bridge the gap between customers understanding about pets and what we are doing? It's a bit complicated in terms of cryptographic approach, right? You can't explain everything at a very abstract level to the top executives. There's a literacy gap between who is taking the decision at a different enterprise and what we are trying to build and sell. Technically, it's very easy and feasible, at least for engineers. But yeah, we need to learn that art of closing the gap between technical jargons, maybe, and the words, and what companies like us are building. If we can crack that, then it's very easy sell. Because, we can build sandbox, like you are saying, and then and let hackers walk on it, and then let them compromise and find the vulnerabilities in the sandbox.
Is there a feeling that institutions react better when it comes to making money rather than preventing risks? Because does it often happen that, until you don't actually see a risk, you don't realize the gravity of it? And of course, Sonja, you and Derek, in those sectors, you're fairly well aware of risks, right? Like, so you're probably more conscious or more reactive to that. But I'm also thinking, and love to get your perspective on this, Jay, and Sid, that is there a case where technologies just gets easier mainstream adoption when it helps businesses make money rather than save or prevent eventualities?
Yeah, that's very true. I mean, everybody in the world is out there to make money and business. Even governments, they will enforce either when things go bad, or the market or the economy will make more money. So the way we are trying to approach is not by selling that we are solving privacy, but more by opening up opportunities for data monetization. That opens up more doors, and it's easier sell.
Interesting. Sid, any last comments in terms of how do we bridge and actually take this towards, I guess, faster implementation, keeping in mind the guardrails that have been mentioned?
Yeah, I am genuinely excited. I think over the next, if we take a 10, 15-year view of how things are playing out, so far, largely you have maybe the top 1 billion that is transacting with each other. But as we imagine bringing the next 7 billion into the economy, giving them the ability to transact, whether that's transacting money, whether that's transacting different types of equities products, whether it's tomorrow I'm starting a new company and I have the ability to raise diverse forms of investment, whether it's a government transacting with me. I mean, there are a whole range of transactions that today, and individuals and businesses that are just not participating in the economy at scale. And so in my mind, it's extremely clear that that is the direction that things are going. And therefore, a lot of the underlying cryptographic developments, like in the world of privacy enhancing technologies, fit within that. And that will unlock newer business models that people will build on top of. So I think you have, on one end, yes, traditional market players that may either see this as an efficiency gain, strengthen their compliance, stronger forms of guarantees versus contractual guarantees, and so on. But I think you'll now start seeing newer players and newer business models that were just not possible currently that start innovating on the back of this technology because of a huge collapse in underlying cost structures. And so I think that's where a large amount of the acceleration will then start to come from. So I'm extremely excited to see how this plays out over the years to come.
Yeah, that's a great summary, great way to round up this discussion. I think there's clearly a lot of innovation within this space, and I do like the thought of, given the sensitivities involved, there are so many variables in play. I think if there are, even from a technology perspective, as long as companies are getting more adapted towards trying things in a few controlled environments and then trying to see how that can slowly and gradually ramp up, would be super exciting. Look, thank you so much to all of you. It's been a great discussion. I promise you only half my docket was completed. This could go on and on, but really appreciate everyone's time. Round of applause for everyone, please. Thank you so much. Thanks.
Thank you for having us.